Hey guys, welcome back to the channel. Hope you're doing well. Today was a rough day in the market, but if we're being honest with each other, I think this is what we expected to see yesterday. Yesterday looks to be a bit of an anomaly. We saw a significant sell-off right in the opening bell. It was a bit of a trap for investors. The S&P 500 was under major pressure. It got down to, it dropped 500 points today, settled at about 6,800 overall. It wasn't a correction. It was a technical shift that we saw today. And so we're going to talk about what exactly changed. Like, what was the sentiment that changed? What were the two factors that I believe were some of the main reasons why we saw this shift? We'll talk about the importance of the Strait of Hormuz. I had some folks mention about, we have a company like Micron that's headquarters in Idaho. Why does that little narrow gap matter to them? What are they shipping there? So we'll talk about the importance of that narrow gap and why the closure of that, or the significant restriction of ships through that channel, has an impact on a company like Micron. We'll take a look at Micron's technical performance today, look at the stock, how it performed throughout the day. And then I want to talk about one big story that hit the news late this afternoon, and why this could shift the sentiment in our favor, guys, if it comes through, and if we're able to see that be a positive move in the market, and we can get some of this supply moving again. That's what we'll talk about in this video. If you haven't done it already, hit like, hit subscribe. I appreciate you guys spending time with me. Let's dive in and take a look at how the market performed today. So first, I want to just start off and just look at a grand view of the S&P 500. Lots of red on your screen. You can see a lot of pressure on a lot of key stocks across a lot of sectors and industries in the S&P 500. Micron on the board right here, you can see down 8% across the board. So the semiconductor space was under pressure all day. There wasn't one major one, at least that's on the S&P 500, that was up today. We did see the infrastructure play improve. Microsoft was a leader today, up over almost 1.5%. And we saw Amazon and Meta with some slight return, but across the board, the sentiment is clear. You can see it on your screen, lots of red. And we see that in the fear index, so the VIX, or the volatility index that I mentioned to you to keep your eye on. Anything over 20 gives you a strong sentiment of fear and anxiety in the market. And we see it trading at over 23.5 right now, up 10% today. A very clear sign that there was rising fear and anxiety in the market today, rising fear and anxiety with investors today. It's a clear sign. Hopefully we start to see this move back down if some things resolve and we get more certainty in the market right now. Two other things I want to call out before we jump back and talk exactly what happened. You could see the crude oil, the WTI here, up over 1%, over 75. You remember, that's the main thing I mentioned. If it gets over 75, we're going to see some concerns about inflationary pressure that's into the market. This is a push for a cost for the oil prices. I think we saw it get up to about $84 a barrel today, which is significantly higher than when we started Operation Epic Fury. And then the other big piece was the dollar shift, and this has become the safe haven play. I think people mentioned what is happening to gold. You know, gold is typically the safe haven play, but yet we saw it plummet by about 5% today. We saw gold opened up and it was hitting ranges of 5,400 an ounce, and it dropped by 5%, just to about $5,000 an ounce. It's clawed its way back. The last time I looked was about $5,100 an ounce. But people aren't racing towards gold. They're racing towards the US dollar. And the reason for that is the 10-year US Treasury yield is over 4% now. It's 4.1. So when you think about a whale where they can place their money temporarily, gold doesn't give you any return. You don't get a yield. You're not getting a 4% return on gold, but you are in the 10-year Treasury. You are with the US dollar. So we're seeing this rotation away from gold, and the safe haven play right now is the US dollar. We've seen that before in other times of conflict. So that's exactly what happened today in the market too. We saw, I want to mention, the oil prices kind of jumped today overall. So not just crude oil. That was up 5% today. It was about, I think, close to 83 a barrel was the last time I saw it. But we also saw natural gas surge today. It was up 23% in European markets. So this gas kind of story with gas and liquefied natural gas. This is kind of creating a inflation bomb or concerns for Wall Street. When you couple that with the $80+ a barrel and the dovish approach we have right now with the Fed, that March rate cut we are all hoping for, the very thing that fueled the market a couple of weeks ago, it's probably officially priced out of the market today. And I want to talk about why the Strait of Hormuz puts so much pressure on a company like Micron. I mentioned in the beginning, you have a company that's based in Idaho. Why is that little gap or that channel in the Middle East so important to them? I want to give you 3 examples of why it has an impact on Micron or other tech companies, but we'll focus on Micron for this. You remember Micron opened up that almost $3 billion assembly and test facility in India. It is now a critical hub within their global supply chain. So think about the chips that are manufactured for Micron in their fabs in Taiwan and Singapore. They're often shipped to India for assembly and testing, and from there, the finished modules are sent to customers in Europe and the Middle East. The challenge that we have right now is that Strait of Hormuz is the gateway to the Persian Gulf. It's the primary maritime corridor for trade between South Asia and Europe. And with the strait effectively closed, what it means is these ships will have to take another route. They have to reroute around the Cape of Good Hope, which is in Africa, and it adds an additional 10 to 14 days of lead time and millions of fuel costs for every shipment that moves. For companies like Micron that operate on this just-in-time inventory or just-in-time delivery to the AI data centers, a 2-week delay is catastrophic, and it's a significant break in the supply chain for them. So then if the maritime lanes aren't open, what other alternatives could they do? And they sometimes will move this through air. So when seas get dangerous, high-value electronics move through the sky. And because Micron's chips are small and high value, they can move a significant portion of their emergency or high-priority inventory via air flight. Well, we saw some challenges with air flight this week as well. We know that one of the largest air cargo hubs is in Dubai. And reports today indicate that both Emirates Sky Cargo and Qatar Airways Cargo, 2 of the largest transporters of semiconductor components in that region, have suspended flights due to missile risks. Estimates right now are saying that the air cargo capacity is plummeted by 18% this week due to the Middle Eastern airspace restrictions. So the remaining flights that are going out, we're seeing price spikes. It's estimated there's price spikes of almost 400%. And this creates a logistical bidding war for companies. And companies with the highest margins or the deepest pockets are the ones who are going to be able to pay that 400% spike. And so whether Micron is competing with Amazon, Nvidia, or other very profitable companies that have high margins, they're going to battle for those remaining flights. The smaller companies, the mid-cap companies, or the smaller companies in this space, they're going to see significant delays in their delivery time. So this is an impact that's affecting all of them. And then the last piece in general, that why this strait impacts companies like Micron, and I mentioned it, it's the price of liquefied natural gas. Semiconductor manufacturing is one of the most energy-intensive industries on Earth. Micron's fabs in Taiwan, Japan, and Singapore rely on imported liquefied natural gas to power their clean rooms, to power them 24/7. 20% of the global liquefied natural gas supply passes through that Strait of Hormuz because it's primarily coming from Qatar. Today's spike, as I mentioned, of 23% in European gas prices, and there was a surge in Asian liquefied natural gas benchmarks, means that the cost of goods, or the COGS for Micron, is going to potentially skyrocket. Even if they can move their product, the cost to make it has just been hit by this geopolitical tax. So they're not just a victim. Companies like Micron are not just a victim of bad sentiment related to the Strait of Hormuz. They are under pressure, and their potential margins are taking a hit for the future quarters to come. So we do have a bullish story that we get to at the end that hopefully gives hope for companies like Micron or other companies that have to move their goods through that channel. But let's jump back and take a look at the technical story or what we saw with Micron overall today, because I think it was a fascinating trade for the stock. So I'm going to pull that up. And the first thing I'm going to do is, because you probably can't even see, let me just show you where, if you look way up there is where we ended the last day, ended at about 412. And you could see where we started this day. So we dropped immediately. We gapped down immediately when the market opened. And we shot down as low as 379. It was probably the low that we hit across the board. I want to pull that back up and pull this where you can see the full day overall. But this stock was under immediate pressure today from the get-go. It finished down 8% on the day, as I showed earlier, just about 379.68. But we saw it significantly gap down at the opening, dropping from Monday's close of 412 down into a level of almost 380. I think 378. They finished that candle right there. It was from a technical perspective, what we call a breakaway gap is when a stock gaps below a major psychological level that we've been holding, which was 400, and it breaks on high volume that you see at the bottom of the screen there, and it fails to fill the gap in the next 30 minutes, it's a signal that the sellers are clearly in control, and they were today. On the chart, you can see we hovered in that 379, 380 level through the majority of the day. This is a critical historical support zone, and it's a floor that we saw with the stock back in early February. We closed at the bottom end of that floor today, which is just over 379 a share, suggesting, if you look at the last few candles, it suggests that there is more downward momentum. And I believe the stock is down in the after hours right now as well. So if this level fails to hold tomorrow at the opening, if we open below and fail to rise back up and achieve the 379, we could see Micron, if it has a gap down, and drive down towards that next support level of 365. Now, the RSI below the screen, you can see it looks as if it's floating in the lower end of the neutral. And so it gives the perception that we could see a bounce, that there is a bounce to support the stock because it's triggering towards being oversold. But remember, in a high volatile environment that we're in right now, in a risk-off environment that we're in right now, RSI can remain oversold for days as institutions look to liquidate their position. The biggest challenge I see with Micron, you don't see it on the this chart. So let me pull over to another chart. Here, guys, I'm going to do it real time, so just bear with me because I want to just show you here the moving averages. Unfortunately, this doesn't have the 5 and the 10-day moving average that I wanted to show you, but you can see we've broken underneath the moving average, the 20-day moving average. We're shifting towards that 50-day moving average overall, and we've seen it break the 5-day average, the 10-day average. Now it's broken past the 20-day average overall. The short-term averages are now trending steeply downward towards the long-term averages. We're moving closer to that 50-day average, and you see the 200-day average significantly down in the below at about 200 a share. I think that's way further down. We have a support level that historically has been there at 365. So we have to just keep our eye on what the opening looks like tomorrow. We're sitting at 379 now. If it breaks tomorrow and doesn't reclaim, we very well could see this stock break down back to 365. But there is some positive factors. That one big one that I want to share with the channel that I think could have an impact on the rest of the week. So let me just pull it over and take a look at it right here. And you can see on your screen, the article that hit late this afternoon is that Trump says the U.S. will provide insurance, military escorts for ships going through the strait. Guys, this would create a bullish sentiment for the stock. It would be a very positive sign overall. So let's just quickly talk about some of the details that we saw. The article mentioned that the U.S. government is going to serve as the last insurer or the insurer of last resort. And it is a massive development that can fundamentally change the risk sentiment or the risk premium through that Strait of Hormuz. So as I mentioned, the article was published this afternoon, and President Trump said, we are nationalizing the risk of moving energy through the Gulf. It is the positive sign, or at least I'm always looking for positive signs. You know that this is one I believe we have seen. So the U.S. Development Finance Corporation, or the DFC, has been ordered to provide political risk insurance to any maritime vessel or carrier at a reasonable price. And it fills the vacuum that we saw when private insurers are going to cancel coverage effectively March 5th. The U.S. Navy, according to Trump's directive, is now been authorized to provide direct escorts, if necessary, to tankers through the channel or through the Strait of Hormuz. And this is a significant impact for a couple reasons. One, if they can successfully navigate these ships through the Strait of Hormuz, it'll take away the alternative route around the Horn of Africa. That would be a 14 additional day on the voyage, which would immediately collapse the logistics surcharge that could drive, and it could drive a massive relief rally to companies like Micron and Nvidia, and it would be a great bullish sign for investors. We also could see the prices of oil come back down. If there's a free flow of energy, if that's guaranteed by the U.S. military, this inflationary bomb that we talked about essentially could be diffused. And so if the U.S. can provide stability and stabilize the strait, the fear trade evaporates, and we could potentially start to see maybe a bullish sentiment gets officially put back on the table for the second half of this week. So what does it mean overall, and what's my sentiment takeaway is I don't think the sell-off is completely done. I don't expect to see a straight line back up. I think we could expect to see some choppiness, to have a choppy environment for the next week, 10 days, 7 to 10 days overall. The bearishness will continue until we see that VIX or that volatility index start to show that it's dipping back below 20. That's a sign that the bears are leaving and the bulls may start to come back in control. And unfortunately, that Hormuz risk premium, or what we mentioned at the top of the hour, of that closing, insurers leaving that will take a few days. That risk will take a few days to fully flush out of stocks unless the U.S. Navy escorts are successful. If we see the U.S. Navy move in and escort ships and reopen that channel, then we could see the market respond significantly faster. So make sure that as we look forward to days, the rest of this week, that you manage your risk effectively. Try to ignore the noise that's out there. There's lots of it. Look for true signals in the market right now, because remember, markets are resilient. They will recover. And I encourage all of us not to panic right now. Trust your gut, trust your instincts. Take care, guys. Talk to you soon.